right, welcome back. I'm the Wall Street Yardie, and this is the weekly market report. Of course, we're going to get you ahead of the market before you take any trades this week. What we're going to cover this week, we're going to talk about the market overview, the macro environment. A couple interesting pieces of news came out last week, so we'll touch on those and how they might affect us this week. Going to talk about some key earnings coming this week. Big one, of course, being NVDA and what we're going to watch for there. As well as we're going to go back to the charts, as we always do every week, and look at the different levels and what's happening with this pullback that we had on Friday and where that can be headed to. And then lastly, I'm going to go through 3 trades that I took last week that I thought were very interesting. One is going very, very well. So we'll go over that. And then the other 2 we'll cover as well to show you what I'm expecting and where I think they're going to go. All right, so let's jump into the macro. So right now, what we saw last week was CPI and PPI were much higher than expected. Inflation is continuing to grow. This is a very big concern for us because if inflation continues next month and the month after that, then we can start to see signs of a recession coming. We have a very volatile election coming up here at the end of the year as well. So going into the summer, it's going to be key to watch what CPI and PPI are going to do for the next month and what we need to do there. The other thing that's concerning is oil continues to be above $100. We have a target of $80 on oil. If we get back to 80, 70, 80 range, we probably feel good about where the market is with that. But if it continues to stay above 100, inflation continues to stay higher, it's going to be harder for the economy to recover. It's going to be harder for people to continue spending. And then the market is going to have to react to that if this continues to stretch a lot longer. The other thing we have is a brand new Fed chair. Now, Kevin Warsh got confirmed last week. Jay Powell's last day was Friday. Warsh starts on Monday, but he's walking into all of what I was just talking about here with CPI and PPI, oil still above 100, and then on top of that, interest rates were getting higher on Friday as well. So we have to pay attention to all of these things as we go through the market. But what I want to pay attention to this week is the fact that we have some very key earnings happening this week. The first one we're going to pay attention to is on Tuesday morning. So if you want to get ahead of this, you got to make sure you get your trades in on Monday before the close. And so we're going to pay attention to Home Depot. Home Depot, for the simple fact that we want to see how the consumer is spending, right? If people are still feeling good about their situation, they're going to go out and start repairing their home, getting ready for the summer, get ready for the barbecue season, right? And then we also have Vertiv on Tuesday morning. They're an AI play. They're AI power play as well as cooling for the AI data center. So we're going to pay attention to what they're saying. Is the AI spend continuing? Are their customers continuing to come in? Is the demand still strong? We want to see how they guide going forward. If so, then the AI play is going to continue to go stronger. Now, the next one, of course, is the big one. On Wednesday after the close, we're going to get NVIDIA. NVIDIA, of course, is the largest company in the world right now, $5.5 trillion market cap, leader in the AI space, obviously. So we're going to pay attention to what they've got to say after Jensen Huang's big trip to China. China didn't buy any chips from them, so there's no real factor there. NVIDIA actually pulled back on Friday, but we're going to see where they say things are headed for the next quarter. And we're going to pay attention to that because they are the leader, right? They're the leader here. If they're saying demand is still strong, then we have to believe them. Next one I'm watching on Wednesday is Intuit. For the simple fact that this is a software play. Software companies have taken a huge hit over the last couple quarters for the simple fact that, the AI and Claude Code and all of these things going on. Folks think they're not going to be able to hold their moat. They're not going to be able to continue the recurring revenue that they have. Intuit is one of the largest software companies out there. So we're going to be paying attention to what they have to say as far as the impact of AI, how they might be using it to move their company forward as well. And then what that's going to mean for their future earnings as well. And then lastly, we're going to close out the week with Walmart and John Deere. Walmart, of course, going back similar to Home Depot. Want to see how the consumer is spending. Are they going to continue to spend? Are they swapping out for cheaper items? What's really happening as far as the inflation goes and what people can afford? And then lastly, John Deere. John Deere is part of the construction infrastructure around the data center. So a lot of these data center folks are buying equipment and looking to John Deere to help them build the data center buildings. So if they're saying equipment and demand is up as well, that is yet another sign that the AI trade is going to go on and continue. So with all of that said, let's jump on over to the SPY chart, see what's happening with the market, and then let's see what levels we can find there and pay attention to for the week before we set any other trades up. Taking a look at our charts here, we had a big run up, right? We've been talking about this for the last couple of weeks now. Friday, we had a nice pullback here. This is going to be healthy for the market, right? Markets don't just go straight up like this in any kind of normal space. So we want to make sure that there's some profit taking happening that allows people to, win, keep some money, put that money back in the economy, and then continue on. So what we're paying attention to is we got to figure out what level we think this is going to come back to. And given that these are all-time highs now, we really don't have any other data to support where our support and resistance should go. So now that we have a pivot back, last week I could not draw my Fibonacci lines because there was no pivot. There was no swing high is what we're looking for, right? Whenever we have our Fibonacci's, we need a swing high and a swing low that we connect together. Last week we were still making highs and we had no pullback, right? Even this red candle, the low here was higher than the candle before it. So that's not a pivot, right? So we finally on Friday got a candle that created a lower low and a lower high from the day before. So this becomes now our swing pivot. So let's go over to our Fibonacci lines here on TradingView, which is a charting platform I'm using. And then I'm going to pick that low there, which was the low from the start of the war, all the way up to the high that we had on Thursday, and then connect that up and see where we end up. So with those 2 points connected, what we see is that the next level of support is going to be around 723.80, which coincidentally enough, I've talked about this on several market reviews. Gap is always a support level. And sure enough, as we come here, yes, we have a couple wicks that we're dealing with, but the Fibonacci drops us right here into the gap area. So I'm looking at this as our next level down, maybe for the week. So maybe we get here, if we bounce off of this and start creating higher highs and higher lows, then we could continue to see maybe new all-time highs. If we break through this and close below this line, then we're going to be looking at the 618 level, which is right around 703. And what I would do, honestly, if it was 703 being such a weird number, right, I'm going to look then back to our original support level, which was the previous all-time highs back in January of around 697, right? So anywhere in this 700 range, this little area between 703 and 697 could be another major area of support for us if we don't hold 723 this week, right? So we're looking for this gap to fill, meaning price is going to come down, cover this area, and then maybe bounce. And that would tell us that the market is bullish again. That might happen on Thursday after NVDA reports, right? That will give us, 3 or 4 days for this to pull back, and then bounce. So that's why these earnings are, and the timing of these earnings can be very important, is because it will then line up with the chart pretty nicely, right? But the chart is giving us some vibes that, hey, we're headed lower, and this is the area we got to watch when we head lower. If we break through here, then we're going to look at that 700 area for the next level of support. So that's what we have going on with the SPY. Let's take a quick look over onto the Bitcoin real quick. I'll flip through a couple charts here. Bitcoin has been, going up and getting back into the trend here. My blue line was our downtrend for Bitcoin. We broke through that here back in April, making higher highs for a while now. We hit up on our resistance level here, which if you look back in November, this was also a support level a couple of times back in November and then also back in January. But what you're seeing here is, we talk about volume quite a bit here, is as we got up here, the volume started drying up. So there was no more momentum going up. But then as we're pulling back, the volume is also slowing down a little bit here. So we're going to watch to see if we get back down to this 75,000 level, call it, for Bitcoin. And then if we're going to bounce and make higher highs, we'll get back up above 81,000. So if you're trading Bitcoin, those are your levels you're going to watch, at 75,000 and the 81, call it 82,000. if you get Bitcoin closing higher than 82,000, then hey, sky's the limit for the rest of Bitcoin throughout the next quarter, maybe next 6 months, right? So Bitcoin is definitely catching what they call a bid, meaning it's headed higher. The trend is definitely headed higher. So we're going to keep an eye on if we can break above this 8,200 level here. So that's what we're looking here on Bitcoin. So with all that said, let's switch over to a couple of trades that I had last week. On Wednesday, I gave you 2 trades that I saw as they were breaking out. This was right around the same time that Trump was in China. One of them was China adjacent, if you will. And the other one is ENPH is a solar play. So this is kind of going into the whole energy and AI play for energy here. So we're going to look at this trade. What I had on the charts on Wednesday, I put my moving averages here because this is something I look at when I'm looking for breakouts. I explained in the video, I'll put a link to the video here as well, is when price started closing above this 200-day moving average after being below it for so long, this was a trigger for me. So what we saw with ENPH, we got in here on Wednesday, right? And then the stock went from Wednesday, it went up quite significantly, right? So we jumped from here $37 all the way up to the high on Friday, touched right around the $53 mark. That's a 43% move in 2 days. This is why I love these trades. They can move very, very fast. They don't all move like this, but when these ones that move like this make this happen, this can be a quick double. In this case, if you're just buying the stock, it's 40%. If you traded the options like I showed you in the video, the options actually returned 100% already in those couple of days as well. So I'm going to continue to follow that trade. I'm going to give you an anatomy of the trade as I roll and change things in that trade. So this is one you want to pay attention to as well. And then the other trade that we had, not going so well, to be honest, is like Lee. So Lee, we saw this big move up, big volume here. I really love this candle, but we did not get the follow through the next day. So Thursday, we did not get the follow through. It pulled back. This one was the China adjacent trade. Li Auto is a Chinese electric vehicle play. So we're gonna have to pay attention to kind of what comes out of that. They do have earnings coming up at the end of the month. So we're gonna see if that's gonna be good or not. We're going to pay attention to that as well. But we got 2 down days after this huge red candle. That's not usually a good sign. I said in the video my stop loss was going to be below my 50-day moving average. We haven't gotten there yet, so I'm still in the trade. But the minute we get down here and we close below this 50-day moving average, I will be closing out that position if that happens. If not, if we get the bounce, this is just support, then we're going to continue to let that one play out as well. The last thing I did this week was actually going back to SPY. We'll take off our Fibonacci here just to clean things up. Because I saw this pullback on Friday, I also decided that, okay, maybe I'll take a play to the downside. So I took a put option trade on this. And what I did is I actually bought the July expiration, right? So I'm going to mark that up. The July expiration, $745 put, right? So that's going to get me here, $745, just so you guys can see it here. I'm going to put a long put. And then I also went ahead and to offset that cost, because that was quite a costly trade. It was like a $20 per share, $2,000 for the contract trade. To offset that a little bit, I put 715. 715 was not a random number. It was the target that I shared last week on the weekly market report. This is where I thought price could go to. So I decided that for July or June, I put the 715 on. So I have one in the June expiration and then the other one in the July expiration. I like to make my long options, which meaning the ones I buy, I like to buy further out. But to offset the cost, I also sold the June 715, which is where I think or I thought last week when we were trading this, I think price could go to, right? We put our Fibonacci's now that we had our Fib. That told us 720, 723. So I'm thinking a little $5 lower, but that's where my trade is set up for. But that got me an extra $6 for selling that option. So I'm total all in, Even though the July cost 20, by selling the June for 6, I was able to get in this trade for $14 a share, $1,400 per contract. So that's just a little way to play the downside here. If this gets down here, this spread is $30. So the spread itself could be worth 30 and I paid 14, right? So potential for doubling my money there. So I just wanted to kind of share that trade. If you want more details on that trade, you want me to work on a video to show you how all of that works, please drop a comment, drop a like, let me know. I'll make sure I get the video out to you guys this week. So that's what we're looking at in the market for this week. Good luck trading. Remember, it's not about chasing hype. You want to follow your process. It's all about knowing when you're getting a good deal. If this helped you see the market a little clearer, make sure you link up with me in the comments. Like, subscribe to the channel so you know when we drop the next one. Have a great week trading.